Hey there, welcome back to Insightful Endeavors, and today we get to take a journey on wealth. Remember, our goal here is always on wealth, health, and growth. And today I'm excited to having us here and having to take a journey on a path that is desired by many, that is financial freedom. So today we get to look on some of the things or some of the investments that you could take and get to escape the 9 to 5 p.m. job, which I know it's a dream for so many of us, where we dream that maybe a day would come and you not have to worry anymore about being stuck in traffic, having to wake up early on a rainy day, having to get late on appointments and interviews, all those things. I know it's something that we all desire, that one day that will come to conquer and maybe have something else that will get to sort us out from the matrix or from the rat race of the 9 to 5 p.m. job. And here today I got some very amazing investments that we could all get into, and then we could have something that would equate to the 9 to 5 p.m. job by earning us some income at the end of the month, at the end of the year, something that could get us going and maybe not only make a living but also make a fortune from it. Remember that with your job, what you get, they are wages. With wages, you can only make a living, but when you diversify your portfolio and get into investment, then you are on a journey now to making wealth. So today we get to dive into this exciting journey. And even before we move on, I would request that you do not subscribe to our channel, that you subscribe, like, share, and also leave a comment down there below so that we can have this conversation even after this video. We get to start on our first investment. And our first investment, we get to look at money market funds, or MMFs. These ones are investment vehicles that you get to invest with, and with some time get to enjoy returns from your investment. These ones can be compared to they are way more better than saving your money in a bank. If you've been having savings and you've been taking them to a bank, this is an option where you could take, and by taking the MMFs, which are way more better because they offer high returns, high interest rates, and again, with these ones you can be able to liquidate your cash at any given time, no matter the amount. With these MMFs, they are low risk investments. Considering there are other investments that you could invest in, but they have maybe high risk rate, but with these ones they are low risk, and your money is safe, and again you are assured of interest rates. With banks, you find that you don't get interest rates at the end of the month, but with MMFs you get in your interest banked into your account every at the end of every month, which is a good thing. There are some of these MMFs that offer even as low as a minimum deposit of 100 shillings and all the way to going up to any amount that you could want maybe to invest. So it is a good way, it's a good way to begin your journey on investment, where you get to deposit your as little as $1, that is maybe 130 Kenyan shilling, and after you invest, at the end of the month you get your returns or interest from your investment cashed into your account, which you can withdraw even together with the profits without having any delay. So that's one of the financial investment that you could take and get to secure yourself a portfolio of investments which could save you from the 9 to 5 job in the long run. Second of our strategic investments that you could get to look at, it's bonds and bills. So these ones, they are another way which you could diversify your portfolio of investment, and with bonds they provide a steady income and are generally less volatile compared to other types of investments. These ones, with bonds and bills, you find that they are loans that you lend the government, and after you lend the government gets to maybe go on with its activities, maybe of constructing roads, constructing hospitals, all the activities that the government gets to run. They run with the money that you lend them, and then after they collect their taxes, then they get to pay you your money back with the interest that it has accumulated. You find that with bonds, they have higher returns, they have higher yields of interest rates, which you do not get from any bank. And so instead of you going and banking your money in a bank which doesn't give you high interest rates, and even if it gives you interest rates, then you have to wait all the way to the end of the year, and if you cash out your money at the middle of the year, then you don't get any interest. With these ones, you get to have your interest calculated and cashed into your accounts at the end of every month, which is a good way to diversify your portfolio and maybe take it as a strategic way of investing and saving yourself from the struggle or the hustle of the 9 to 5 p.m. job, which is a dream to all of us. And now we get to look on the third investment, which is an amazing one. And this one, the third strategic investment that you could take, it's on stocks. So stocks, these are what we call here in Kenya as shares. So this one is an amazing one. This is where you get to own a part of a company, that you get to become part of the owners of the company. How these ones work is that you research on a company that is doing well, or maybe the one that is beginning, and you're anticipating that after some period of time, then maybe it could rise in value, it could appreciate, and it will be making profits consistently. So what you do is that you get to buy shares of this company, you own a certain percentage of the company, and at the end of maybe their financial year, you get something we call dividends. That is one way you could get to earn from stocks, which is a very good way. You find that companies, they offer their shares at some to as little as even below $1, which is not something so hard for us to be able to get into or to invest into. And with the shares, you find that countries, they offer the least amount of shares you can get to purchase. There are 100 shares. So when you buy these shares, you get to own a certain percentage of a company, and at the end of the year, whatever profits that they have made during that financial year, then they get to share the dividends to all the shareholders of that company. That's how you get to participate in stocks. That is one way. Again, you can also participate in this one of stocks, or get to earn from the stocks, is by you buying the shares for a company that you're anticipating that after a certain period of time, it's going to rise in value, it's going to appreciate, it's going to be making consistent profits. After you buy the shares, which maybe you may buy them at a price of $1, and then by the end of maybe 3 years, 5 years, the price of share will have appreciated maybe to a price of $5, and then you can get to sell your shares to another shareholder, or even back to the company, and you get to make your amazing profits. So that's another way you can do it with shares and stocks. But before you do that, you have to do your research again, so that you cannot purchase shares which are not going to make you any profit. Remember, we are in this game only to make profits. We are not here to gamble. We are not here to make any decisions with our finances which are not legit decisions, or decisions that are going to lead us into another mess. We are here to make decisions. We are here to take investments that will save us from the 9 to 5 p.m. job, which is an amazing way, and it's a dream, I know, for all of us, that we aspire that one day we'll not have to wake up and have in mind the struggle of having to rush to a job that maybe you have already learned late off. Something to note with all these things is that you need to stay in course. If you begin with investments, they are not going to start immediately appreciating. For example, for the case of a money market fund, you take a money market fund with the ones that offer maybe, because there are some that offer the least deposit being 100 shilling. Maybe you take such an investment of a money market fund and you deposit 100 shilling. You are not expecting much from that for the first month, or maybe you deposit 1,000 or maybe even 5,000. You are not expecting much for the beginning of the first month, but you come to realize after the first year, the second year, on the third year maybe, or depending on the amount that you made your first or initial investment, you now start seeing the fruit of whatever you invested. Now at this particular time, you now start seeing good returns, higher returns of money that maybe you could even think of quitting your job and now starting to fully depend on these investments. So one thing that you need to note is that you need to be patient with them. Again, you need to be consistent, you need to stay on course, because these are things that will take time. Remember, with investments, this is not a sprint. This is a marathon, which you have to take your time and remain consistent with. Continue diversifying with these portfolios. Look at them. Do not take these suggestions of the money market fund, bonds and stocks, and decide on which one works for you best without having done your research. So the best thing you could do is take all of them, research on your own, decide on which one works best for you depending on the risk taker of a person you are, and then after you find the one that works best for you, you take it, invest with it, and then with time you get to accumulate a fortune that could save you from the 9 to 5 p.m. job. So thank you. That's it from me today. I hope that these insights will continue helping us even to build our financial freedom around our lives, around our families, around our nation, and we get to save ourselves from the hassle of the 9 to 5 p.m. job. Don't continue to stay in that job. When you're staying in that job, you're helping the person you're working for to make a fortune, to make himself wealth. But for you, whatever he's giving you, it's just a pill for your pain to continue there and help them continue making a fortune. It's not a bad option to be working in a job, but rather you would be working on your job full time, and then part time you get to invest your resources to other sides of investments. By this you diversify, and then at the end of the journey you get to achieve yourself financial freedom. Thank you. That's it from me. I hope this information gets to help us and make us more better on our journey of financial freedom. Remember to subscribe, also like, also share, and leave a comment below down this video so that we can continue with this conversation even after this video. See you in the next video. Bye bye.